Hey everyone, welcome back to Corporate Dakota. Today INVO Fertility Incorporated just filed their annual report on Form 10, and it is filled with some big changes. Quick note, this is not financial advice, just my take on public filings for educational purposes. Right now, the company's stock is trading super low, and this filing reveals some serious financial challenges and a lot of recent deal, making that might explain why. So INVO Fertility Incorporated is a company focused on the fertility market, aiming to make assisted reproductive technology more accessible. They are doing this by acquiring and running fertility clinics and also selling their INVO medical device. As of the end of 2025, they have 4 clinics, and they continue to sell their INVO technology to other clinics. Looking at the overview, INVO Fertility has been working hard to stabilize and grow its business. They had a pretty eventful 2025 and early 2026, with several key acquisitions and financing deals which really shaped their financial picture. A big part of their strategy is buying established fertility clinics, which they've been doing to boost revenue and gain scale. Financially, for 2025, their total revenue was about $6.8 million, up a little from $6.5 million in 2024. Most of this revenue, around $6.7 million, comes from their clinic operations. The increase was mainly due to more clinic revenue. However, their costs also went up, with the cost of services reaching $4.3 million in 2025, an increase from $3.6 million in 2024. This jump is mostly because they spent more on clinic personnel. Now, one of the most striking numbers in the filing is the impairment of intangible assets. In 2025, they recorded an impairment of about $1.4 million. This happened because they had to release Dr. Elizabeth Pritz from her non-compete agreement as part of a settlement. This non-compete was part of the acquisition of Wisconsin Fertility Institute, and when they let her out of it, it triggered this impairment charge. On a brighter note, they saw a significant gain on changes in fair value, totaling over $5.2 million in 2025. This gain is linked to changes in the value of financial instruments like warrants and embedded derivatives from their financing deals, particularly those involving 5 narrow lane LP or FNL. But there is more debt news. They had a loss from debt extinguishment of over $2.1 million in 2025, a big jump from just $40,000 in 2024. This is mainly due to non-cash equity they issued when dealing with their convertible debentures and other notes. A huge event in 2025 was the divestiture of Naya Therapeutics, which they acquired in late 2024. They decided to refocus solely on their fertility business, leading to a loss from discontinued operations of over $1.5 million related to this sale, in total counting this loss. Their net loss for 2025 ballooned to over $23 million. Looking at cash flow, they used about $7 million in operations in 2025, which is a significant increase from the $3 million used in 2024. This basically means they spent a lot more cash to run the business than they brought in from operations. Now, let's talk about their stock. As of the 31st of December 2024, they had just 93 stock options outstanding, fast forward to the end of 2025, and they have over 9 million warrants and nearly 427,000 pre-funded warrants issued, showing a massive increase in potential shares and a sign of recent financing activities. This highlights a key risk: significant dilution. When a company issues a lot of new shares or warrants, especially at lower prices, existing shareholders' ownership percentage gets smaller. This is very common when a company is struggling and needs cash, like INVO Fertility. Many microcap companies that do many of these stock splits and warrant issuances historically see a significant drop in value, often around 40 to 70%, as dilution and financial pressures mount. The company is very upfront about its financial situation. They've accumulated a net loss of over $91 million since they started, and this raises serious questions about their ability to keep operating, what they call going concern. They don't expect their current cash to be enough for the next year, and getting more money might be tough, or come with very strict rules that limit how they can run the business. This is a classic going concern warning, similar to what we saw with companies like Bed Bath and Beyond or Rite Aid before they faced major issues. And if all that wasn't enough, they're facing a NASDAQ delisting notice for late SEC filings. This is a big deal. It means they missed deadlines for their annual report and a recent quarterly report. If they don't fix this quickly, their stock could be moved off NASDAQ, which would make it much harder for investors to buy or sell shares and could really hurt investor confidence. Adding to the concerns, management identified material weaknesses in their internal financial controls. This essentially means there are gaps in how they track and report their finances, partly due to limited staff and the complexity of their transactions. They're working to fix this, but until it is resolved, there is a higher risk of financial reporting errors. They also have substantial secured debt, including a loan from Decathlon. This debt comes with strict rules or covenants that limit their ability to take on more debt, sell assets, or even merge with other companies. If they break any of these rules, it could trigger a default, potentially allowing lenders to seize assets, which would be catastrophic. Despite these challenges, their strategy remains focused on growth, specifically through acquiring more fertility clinics and expanding their INVO Center operations. They recently completed the acquisition of Family Beginnings in Indiana, adding to their footprint. They also have joint ventures in Alabama and Georgia focusing on their INVOcell technology. One significant risk they point out is the evolving legal landscape around abortion and embryo personhood. With changes in laws in states where they operate, like the Alabama Supreme Court ruling that treated stored embryos as children, the availability and demand for IVF services could be directly impacted. While Indiana currently has protections, the legal situation is still uncertain and could affect their business. So to wrap up, INVO Fertility is in a tough spot. They have a clear growth strategy in a promising market, but they are facing significant financial headwinds, including a need for more capital, substantial debt, and potential delisting from NASDAQ. The company is upfront about the risks, highlighting their going concern status and material weaknesses in financial reporting. Their recent financial maneuvers, like debt conversions and warrant issuances, have brought in cash but also created complexity and potential future dilution for shareholders. The biggest risk I am watching is whether they can navigate these financial and regulatory challenges while executing their growth plans, especially the impact of the NASDAQ delinquency notice. What I am actually looking for is a clear path to profitability and consistent revenue generation that does not rely solely on constant financing. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, please like this video, subscribe, and join our Discord for more insights.